All right, for those of you guys that are on YouTube, feel free to chat in, and on Facebook and on Zoom. If you guys have any questions, of course, as always, feel free to chat those questions in. If you're on Zoom, you may get an opportunity to unmute and speak. All right. Good. Just another few minutes, we'll get started. All right, let's go ahead and get going. Thanks for joining us to our Day Trading Masterclass. My name is Hiram Cheras. I'm co-owner of Day Trade Smart with my business partner, Tim Koblin. And we're here to investigate day trading, so let's check it out. First things, like, share, and follow us on social media. There are social media links there. And we'll move on. So first question I want to ask you guys before we get going here is why you're here. Why are you looking at day trading? What is it that interests you about day trading? And obviously, when we ask that question, we get a lot of the canned responses, right? You have always had an interest, or it looks like it makes good money, or whatever that might be. But ultimately, it's what you want to do with that money. It's not necessarily just the money, right? It's what you want to do with that money. It's for some of you guys, it might be something really simple, like you're just curious. Or you want to supplement your income or replace your income, right? You want to retire. You want to stack your retirement. You want to retire now. You want a better lifestyle, nicer house, nicer car, maybe send your kids to a better school, pay for college, whatever it might be, right? One of the big ones that we get is time freedom. This one's huge, primarily because that's essentially our goal in creating what anytime we innovate within our organization is to create a better way to help you have more time freedom, because ultimately that's what all of us want. It's difficult to have any kind of time freedom when you are tied to a 9-to-5 job, which is what causes for a lot of us to branch out and look at other things, other opportunities, other ways to make additional income so that we can make a more comfortable life for ourselves and have more time to enjoy life before we're 65, 70 years old and ready to retire, right? We want to be able to retire when we're still young and, youthful, and be able to do things and enjoy things, enjoy our children or our grandchildren, or just enjoy our own lives. So the other thing is, what have you tried? What things have you tried in order to accomplish your why? If it's time freedom or lifestyle, you want to replace your income. what things have you tried? Some of the common things are like side jobs, right? You've got, another job on the side that you do in addition to your full-time job, or perhaps if you have a spouse, then your spouse works. Maybe get overtime at work, going to college, try to get some education so that you can, get a better kind of job. Maybe business ventures. Maybe you've tried to start a business. Maybe you're an entrepreneur. You've tried multiple businesses in the past. Maybe MLMs, multi-level marketing. Attempted trading. Maybe that's something that you've already tried or you're in the process of trying. Maybe you've got a crypto account or you're trading some stocks or things like that. Or nothing at all, right? Perhaps you just haven't tried anything. Right now is your opportunity, your first time kind of looking at things and deciding, if day trading is the right option. So the other question I want to ask is, did it work out, right? Or are you still trying? Are you still trying things? Are you still trying day trading? Or are you going to college? Or are you working those side jobs? You've got another business venture. And these are things I really want you to consider as we go through this process, because ultimately what we want you to be able to evaluate is, 1, can you do this? 2, is it valuable? And 3, does it meet a personal need, right? Whatever this why is right here. And so we're going to look at some of those things today as we go through this process. Now, obviously, we're here to learn or investigate day trading, right? So tonight I'm going to show you what I've shown to thousands of other people just like you, right? Those that have never traded to those that have been trading for decades and everything in between. So I'm going to show you how you can reach your financial goals, whatever it may be, right? Supplement, replace income, retirement, time freedom, whatever that may be, right? I want to show you how you can reach those goals by day trading just a few hours or less a day. Okay, so let's get right into it. And we're going to start with candlesticks just because I want to make sure that you guys are following along as we go through this process. So a candlestick is a method with which the market measures price movement over time, right? And depending on which time frame you're looking at, each candlestick represents that much movement, that much time in the market. So if you're looking at a yearly candlestick, then every candlestick represents 1 year of movement in the market. Monthly is 1 month, weekly, daily. We have 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 10 minute, 5 minute, all the way down to even a 1 minute, right? And so obviously, if we're looking at a 1 minute chart, then it takes, 5 of those 1 minute chart candles to make up 1 5-minute candle, or 10 1 minute candles to make up a 10-minute candle, and so on and so forth, right? So if we're looking at a 1 hour chart, it would take, 24 1 hour candles to make up a 1 day candlestick. All right, so let's look at the components of a candlestick. So we have a green candle, and a green candle opens at the bottom, and this wick up here, this thin stick that you'll see sometimes, that is how high it went for that time frame. So if we're looking at a 1 hour candle, excuse me, if we're looking at a 1 hour candle, here is how high it went for that 1 hour, right? The low is called a shadow, and this is how low that candle went in that 1 hour. And then the close is up top here. So it opens and then it closes higher than it opens, thus it is a green candle. Within that candle, it went that high and that low. And sometimes it could go that high all the way back to that low and then go back up and kind of play around a little bit and then close right there. And that's what makes it a green candle. It closed, it ended at the top of the hour. If this is a 60-minute candle, it ended higher than it started, and that makes a green candle. Now let's look at a red candle. It's just the opposite. The open is at the top. The high, same as the green candle, and the low is the same as the green candle. The wick is how high it went for that hour if we're looking at a 1 hour candle. And the shadow, this bottom part down here, is how low it went for that hour. And then, of course, the close is at the bottom of the body of the candlestick. So it opened here and it closed here, right? So it closed lower than it opened, and thus it is a red candle. All right, so just want to be clear on what we're looking at here. All right, let's move on. So we're going to get right into this. We're going to look at a trade setup, and we won't worry about going over it here. I'm just going to show it to you on our charts. There's a lot I want to cover tonight. Okay. So let's go back. Oh. Okay. So what we're going to look at is a setup we call dirty pressure. Now, these are our indicators. These top indicators are our TNT indicators. These middle are our major and minor indicators. The green and red are the majors. The gray and black are the minors. And the bottom one down here is what we call the pressure indicator. Okay? The green and red lines down here are the pressure indicator. Now, for this setup, we're going to look at the pressure indicator. Now, again, our indicators work multiple ways. One of the ways they work is logically. When the indicators point up, it's indicating we should take a buy. When they point down, it's indicating we should take a sell. And there are other situations where it's pointing down and it's telling us we should buy, which seems illogical, right? But when we learn how to read the indicators and we understand the market, we understand why that happens and why it's better to take a buy in that situation. And vice versa, right? Sometimes they're pointed up and they're telling us to sell or to go down. The third way is pattern-based. When we first start somebody off with our indicators, even with day trading in general, so whether you've been around for decades or you've never traded before in your life, it's likely that we would still start you off with something like a pattern-based indication. It's what's called a systematic approach. It's a square peg, square hole scenario. So I can show you this square peg, square hole scenario, and having very little to no experience in the market, you'd be able to identify that and know when to execute a trade, either up or down. And we'll talk about how we execute down as well as up here in a moment. So for this particular setup, all we're looking for first is in this pressure indicator right here. So this is pressure, and we want to see when the green line in pressure intersects with the red line. So you can see right now they're separated, they're apart. And if I click forward, okay, they're a little bit closer. Okay, now green is on top. So when it intersects, you can see this crossed on top of red on this candle. And on that same candle, we want to see that all four of these lines are pointed up, and they're not, so this is not our setup. Now, just to be clear, now that green is crossed on top of red, if on the next candle these point up, that would not count either, right? So it's a square peg, square hole. We want this to be on top, and then at the very same candle, we want these major and minor to already be pointed up. Obviously, we don't have that right now, so that's not our setup. And then when green is already on top in pressure and it crosses below red, let's see if we can find one of those. Okay, so right there, it crosses below red, then we want to see all these lines pointed down. Now, they're not pointed down right now, so that's not our setup either. Now, I'll explain to you what I got set up here. This is a Euro-USD 60-minute. So for tonight, we're going to look at the Forex market. We do trade just about any other market. But we like to start people off within the Forex market primarily because it's a 24/5 market. It's 24 hours a day, 5 days a week, from Sunday at 5 o'clock Eastern, 5 p.m. Eastern, until Friday at 5 p.m. Eastern. The market is open. So it doesn't matter what your schedule is like. If you work graveyards, if you work early mornings, afternoons, whatever it might be, you can always find a time to be able to day trade in the Forex market, which is why we like to start people with that, because generally, while you're making the transition from working your regular job to trading full-time, you want to be able to have that room to be able to trade and practice and so on. So the other reason is because it's the largest market in the world by far and away. It's a $6 trillion a day market. And the euro versus U.S. dollar accounts for 1/3 of that $6 trillion a day exchanging hands every day, 5 days a week. Okay, so we're going to use the Euro-USD as our example today, and we're going to be looking at a 60-minute chart. Again, each of these candles is 60 minutes of movement within the market. Okay, so when green is on bottom, when it crosses on bottom, we want all four of those lines to point down, and then we would take a sell or a short trade, okay? And I'll kind of walk you guys through this as we go. So the first thing I'm going to do is look for the setup. Okay, green's on top. but minors are not pointed up, so we're going to skip that one. Okay, green's on bottom. It just popped on bottom and pressure right here. But red is up. Majors are not both pointed down. Minors are kind of, but not really. So we don't have all four of those lines pointed down yet. So let's keep going. Okay. So right here we see the intersection. Green is on top. Now you'll notice that over here I have another chart. This is the very same thing as this, but it's just stretched out so we can see more clearly if green is on top or on bottom and if it's just arrived there. So right here you can see it's kind of difficult to see that. Now the only reason I don't just stretch this one out is because if I did that, then we wouldn't be able to very clearly see what the majors and minors are doing. So just for the sake of this exercise, I've just got this separate chart over here to the right. Okay, so right here, green, let's go back one candle. Green is on bottom. We can see right there and more clearly right there. And then as I click over to the next candle, right there, we can see green has now crossed on top of red in pressure. And all four of these lines are now pointed up. So right here would be our entry for a buy trade when this candle ends, which means at the top of the hour, this candle ends and a new candle begins. So at the very end of this candle and the very beginning of the new candle, we would enter the trade. Our entry right here is 1.20720. You see that price right there. Now, for this example, we're just going to use, let's just use a 5 pip stop loss and a 5 pip take profit. This is a 1-to-1 risk to reward. Okay, so 1.20720, and we want to go up by 5 pips before we go down by 5 pips. So to do this, we're just going to look at these two middle numbers right here, 72. So this number, the 0, this last 0 right here, that's the micro pip. It takes 10 of those to make a regular pip. Now we trade on regular pips, so the second to last number, the 2. So if I increase this number by 5, then I would have 77, right? And then I just carry up those other numbers, 1.20770. Okay, so there's my take profit, 1.20770. So I'm going to draw that in, 1.20770. And then the stop loss will be 5 pips below that. So 72 minus 5 is going to be 68, right? 68. Let me think about that. No, 67. 67. Yep. Okay, 67. 1 point, and then bringing down those other numbers, right? 1.20670. That's my stop loss. In other words, where I want the bleeding to stop if the trade does not go in my favor. Okay? So this is called protection. If I didn't have protection and I just hoped that the market would just come back eventually and take profit, I leave myself open to losing my entire account. So instead, we have parameters for which we use to execute. Now, these parameters, we don't just make them up. Tonight, we're just making them up, by the way. This is just so we have a target to focus on tonight. But in order to establish what these numbers would be, we would backtest. And I want to be clear because there's a right way and there's a wrong way of backtesting. The right way is going back without having a predetermined stop loss and take profit, right? Without having these predetermined parameters, the 5 and 5 in this example. Rather, we would collect the information to see what the market did every time our setup was present, and then we would analyze it to determine what the best stop loss and take profit would be for the specific times that we trade, the specific currency pair we trade, the specific setup we trade. Okay, so we're not going to get a lot into backtesting tonight. I've got videos on it on some of our sites, so definitely subscribe to us, follow us on social media like YouTube and Facebook and so on, and you'll find some of that content. So tonight we're just going to use this as an example just so we have a target. So our take profit is that blue line. Essentially what that would look like is if we were using, say, a brokerage like an ECN, Electronic Communication Network brokerage, then we would press the button, the buy button, when those parameters were present at the end of that candle. And I'll show you one right now. I do want to preface before I show this to you. First, this is a demo account. We do not make income claims. We would not show you a live account. Secondly, we do not make recommendations for brokers. We are not an introducing broker, nor do we intend to be. So we're not going to make any recommendations for brokers. We just leave that to you. So right here, I'm going to show you this. This is MetaTrader 4, and you can actually go online and just download MetaTrader 4 on your phone or on your computer, and this would give you access to the live market, and you can set up what's called a demo account. And with a demo account, that allows for you to practice in the Forex market, in the live Forex market with paper money. Okay, so if you press the buy or sell button, you would be placing a trade, and then you would have to tell this program, this broker, when you would want the trade to come out and give you profit. And if it didn't go up to give you profit, then you'd want it to go, then you'd want to stop the bleeding as it went against you and say, this is all I'm willing to lose. If it goes that far, pull me out of the trade, I'll lose the trade, and I'll live to fight another day. Okay, and to determine these numbers, again, we backtest, and we figure out within a win percentage what risk to reward is going to be most profitable. And that's how we use money management in order to be successful in day trading. And let me just be clear, if you're not doing things like backtesting, implementing money management, you're not a real trader. And if you're trying to trade with real money and you haven't figured out how to do those things yet, then you're making a mistake and you should stop immediately, because you will lose that money. You may get lucky, make a few profitable trades, but when that luck runs out, not if, but when it runs out, you're going to lose all that money. So you don't want to do that. You want to approach day trading correctly. And that's instituting money management, backtesting, risk to reward, risk percentage, probability, all these different things. Okay, and we'll talk a little bit more about that here in just a moment. Okay, so now on the next candles, we want for the market to go up to that blue line before it goes down to that red line. So let's click forward and see what it did. Okay, so it looks like it did both, right? It went up 9.3, it went down 10.7. So let's look at it 5 minutes at a time. So again, if I'm looking at this 5-minute chart, then this is the last 5 minutes of this 60-minute candle. And it takes 12 of these to make up one of these. Okay? So if I click forward on this 5-minute chart, I'll be able to see what happens in the first 5 minutes or the second 5 minutes, third 5 minutes, right, 15 minutes, so on and so forth. And I want to see, did it go up by 5 pips before it went down by 10 pips? Or rather 5 pips. So first candle, first 5 minutes, that's fine. It went 6 pips. It went 4.5 down, but it went 6 pips first, and it didn't go, before it went 6 pips, it didn't go 5, so we would have won that trade. Great. Simple, easy peasy. Okay. Now, so let's go back one candle here. Let's check this out. Green is on top right now in pressure. So when we see green go on bottom, like that, right? Now green is on bottom in pressure. You can see it more clearly right there. Green is on bottom in pressure. We want all 4 of these lines to point down, the major and minor. And they're now pointed down on the same candle as green crossed below red. Okay? So right here, we would actually enter our trade at the end of this candle, right? So that entry is 1.20696. So again, we're going to look at these two numbers. 6.9 minus 5 would be 6.4. And then bring down those other numbers. What? 1, 2, 0, 6, 4, 6. Now this is what's cool about day trading, okay? When I first learned this, when I first started day trading, I didn't know anything about day trading when I first started. When I first started using these indicators, I knew nothing. All I knew was how stocks work, right? I want to purchase a stock when its value is low, and then as its value increases, I want to sell it and make profit, right? Because I bought it here and then I sold it back at a higher price, so I made that profit. That's all I understood of trading. Now with day trading and with the Forex market, I could buy something at this level, and then as it goes up, I can make profit, right? Or I can get into the trade at this level, and as it goes down, I can make profit. Either direction it goes, I can make profit. I don't need for it to go up in order to make profit. When it goes up, I can go long, or what's called buy, and when it comes down, I can short or sell, and I can make profit as it goes lower. So it doesn't matter which direction it goes, which is really powerful, because if you think about it, think about 2007 and 2008 in the U.S. Think about 2011, 2016, the beginning of 2020. All these different times, right, where we had some type of recession or depressive economy or currency. If you were trading stock, you would have to wait sometimes months and months before you'd catch a rally up, right? And if you didn't, then you lost your shorts, right? Because all it did was went down. And if you can only go one direction, that really limits your ability to trade any time. So your ability to earn is contingent on the market going up. And if it doesn't, then you don't have the ability to make money. Okay? So with this is bulletproof, right? It's bubble proof. It's titanium. It's recession proof. It's depression proof. Right? It doesn't matter if things are just going south. You can short the market, and you can make just as much shorting as you can going long, right? Buying and going up. So that was really, really impactful for me. And I think that for those of you guys that weren't aware of that, it's going to have the same effect on you. That's a big deal. Okay, so here we want this to go down. Then we want this market to go down, and when it does, it gives us profit. And we are going to go to 1.20646, and then our stop loss 6.9 plus 5 is going to be 7.4, right? So our stop loss will be 7.4. Bring up those other numbers, 1.20, 746. So our stop loss is going to be 1.20746. And our take profit is going to be 1.20646. Oh, right there. All right. So now in this, whoops, I put the wrong colors. This is red because we don't want it to go there, and this is blue because we do want it to go there. So here we just want it to go down to that blue line before it goes up and touches that red line. We're going to do 5 examples today, so this is our second example. Okay, so let's click forward. Good. So that one came down. It went 10.4 pips, which is double what we were looking for. It did move up about 1.1 pips, but that wouldn't even mattered because it didn't go up enough to close us out of that trade with a negative amount. Instead, it went down and gave us our profit. Okay, and we'll talk in just a moment about how much these types of trades could be worth. So hang out for that. Okay, so now green is on bottom. So now we're waiting for green to cross on top of red. And when it crosses on top of red, of course, we want all 4 of those lines to point up. So just remember, a good way to remember it is for semantics is green on bottom. When it crosses on bottom, when we think bottom, we think like bottom shelf, we think down. So we want these to be pointed down. When we think top, green crosses on top in pressure, then we think top. And top like top shelf, is up. So we want these to be pointed up. Okay? All four of these major minor lines to be pointed up. Okay, so let's go forward. Right now, green is on bottom. We're waiting for it to cross in pressure. We're waiting for it to cross on top of red, and all four of these lines point up. It doesn't matter if this is pointed up or down. The pressure indicator doesn't matter if that's pointed up or down. All we want is to see that intersection of green either on top or on bottom of the red line. Okay? All right, so let's go forward. We're looking for the green to cross the red pressure line. All right, right there. So green crossed on top of red. It just right then on that candle crossed on top of red. And all four of these lines are pointed up on the same candle at the same time, right? So right there, that would give us our entry for our next trade. Now what I'm going to do is I'm going to replay this because I want you to be able to see first how to identify the setup, right? Second, when to place the trade, when you're going to push the button, and third, how to place the trade. And the how is just in your brokerage account. For today, we're just using these parameters to practice with: a 5-pip stop loss and a 5-pip take profit. Okay, so when this candle first started, now notice, this is another thing I want you to notice, just talking about candlesticks. As it moves lower than where it started, it turns red. And then as it moves higher than where it started, it turns green. Now watch, as it moves back up, you'll see that it leaves that shadow, right? That little thin stick at the bottom, like that one, right? And then if it moves up and then moves back down, it'll leave one of these, a wick, right? But as it moves lower than where it started, it turns red. And then as it moves higher than where it started, it starts to turn green. Okay, so you'll see that kind of fluctuate. Now, as this candle first started, we don't have our setup, right? Green is not on top yet in pressure. Majors are pointed up, minors are pointed down, so nothing looks like our setup quite yet. So let's fast forward and see when that occurs. Let's check there. Yeah, green's on top, and all four lines are pointed up. Now, the parameters are there, but we still have 15 minutes and 56 seconds left on this candle. So we would not be executing this trade for 15 minutes and 56 seconds if we were watching it right now. The parameters have to remain that way for 15 minutes and 56 seconds. So that being said, if we were watching this trade on a 1-hour candle, on a 60-minute candle, we wouldn't even start looking for this setup until maybe 5 to 10 minutes before the top of the hour, right? Otherwise, you'd be waiting around, in this case, 15 minutes, sometimes even longer. So that's not a good use of time, right? So instead, since we know that we can't even execute the trade until the top of the hour, then it's best to start looking for it 5 to 10 minutes before the top of the hour. So check this out. So let's get down to 5 minutes here. So right here in 12 seconds, we'll be at the 5-minute mark. So let me just, right there. Okay. We're at the 5-minute mark. And when that happens and all of our parameters are there for this setup and others, we send out an automatic notification, right? Because what did we talk about? We talked about time freedom. We talked about being able to supplement, replace your income, all these different things without having to, grind out, a 9 to 5 or work until we're dead. Right? If you could do this, and what did I say? We're going to look at doing this just a few hours a day, right? Just a few hours a day to maximize your profits, mitigate your market exposure, replace, supplement your income, whatever it might be, so that you're not replacing one 9 to 5 with another, right? Essentially what you're doing then is you are making more or as much or more in day trading for a fraction of the time, a few hours or less a day versus 40, 50, 60 hours a week. So let's look at dirty pressure. Let's look at a full day. So let's look at yesterday. Yesterday we sent out, and this automatically happens, we sent out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 dirty pressure alerts just yesterday. And this setup is going to alert anywhere from 10 to 15 times a day. Okay, just this one setup. And you can see there were other alerts that we had in there. But just this one is going to send you a notification right to your phone using the Slack app, 10, 15 times a day, along with other setups. You're going to get 20, 30 setups a day on that alert program. And I'll talk to you guys about how you can access those here in just a moment. Okay, so here we got 2 minutes and 55 seconds before this candle ends. And we got an alert. We start looking at the trade. Yes, green is on top. All 4 lines are pointed up. Perfect. So we're not having to sit in front of our computer and wait for a setup or draw a whole bunch of lines or do a whole bunch of analysis or use a million different things. This is very, very simple. Square peg, square hole. Is green on top? Yes. Our major minor pointed up? Yes. Good. You know a trade. That's simple. One that happens multiple times a day, 10, 15 times a day on the 6 currency pairs that we track it on. Right? That is huge. That is astronomical, right? So check this out. Now we've got plenty of time. We're not stressed about knee-jerk reaction. We don't have to be quick on the trigger. We don't have to have this super fast internet. When a lot of that, those myths about day trading don't apply here, right? You don't need any of that stuff. You can do this from a phone. You don't even need a computer, right? So 2 minutes, minute and 57 seconds. Let's speed that up so we don't have to watch paint dry here. Minute and 30 seconds. 40, 30, 20, 13 seconds. All right, here we go. So in 13 seconds, we would maybe have our brokerage up, ready to press the buy button. Right here, I'm just going to draw a line, obviously. But as soon as that new candle comes out, I would press that buy button. Boom, right there. New candle came out, we would be in that trade. Okay, so now we're in the trade, right? And let me just show you an example. We would have pressed the buy button, and we would have set a take profit. Right, so our entry for this is 109.478. This is the USD/JPY, and so the number format is a little different, but the same rule applies. So 109.478, and we're just going to look at these two numbers, 47. So if we're going to go up by 5, then 47 plus 5 is 52, right? Okay, 52. So 109.528. That's our take profit. And then our stop loss would be 47 minus 5. So 42, right? 42, bring down that 8. 901. Okay. Now I want you guys to pay attention to something here. Obviously, we just threw this in. We weren't planning on a buy or a sell. So even if this won, it would be lucky, right? This is just a demo account, so it doesn't matter. But even if we won this trade, that would have just been luck. We didn't look at indications or anything. I was just showing you how to place the trade. Okay, so 109.528, and you guys, this is, you can check the markets, against your brokerage. Make sure you can see that these are live quotes, but this is paper money. This is not real money. Okay, so our take profit is going to be 109.528. So 109.528, and our stop loss is going to be 109.428. Okay, and then I'll press that modify button. You can see those lines appear. So you can see right there where it says pips 50. That's actually not 50 pips. It's 50 micro pips, and 50 micro pips is 5 regular pips. Same thing down here, negative 50 pips, but that's 50 micro pips or points, and so that's 5 regular pips. So you want to be aware of that when you're using this MetaTrader 4. And a lot of times, regardless of the broker you use, it's going to look the exact same. Right? It's going to be MetaTrader 4, but with a different brokerage, or the same brokerage. It doesn't matter. Okay. So now you've told the system that when it gets to this line, pull me out of the trade and give me my profit and remove me from the market. If it doesn't go to that line and it starts to go down, then don't let it get any further than that line, and I'll lose my trade and I'll live to fight another day. Okay? So that's basically what we do with that. And then we're in the market, right? That's how we get into the market. Okay, so right here, that line would represent that entry, right? And our exit, our take profit, would then be 5 pips above that line. So 1.20538, 1.20588. 88. That's our take profit. We want it to go up. And then our stop loss is going to be 1.204, 1.20488, right? And we don't want it to go there. So check this out, just kind of noticing this. As this new candle came out, this red line is down, right? Which we want them to all be pointed up in green on top. But it doesn't matter how the new candle looks. All we're concerned about is how the last candle ended, right? Because these are predictive indicators. They're telling us what is going to happen next or what is going to continue to happen. We don't need an indicator to tell us that the market is going up. We can just look at the candles, right? It's a green candle, the market's going up. We don't need a weatherman to tell us it's raining outside, right? It helps if the weatherman tells us it's raining outside and it's going to continue to rain, just like with an indicator. It helps if an indicator tells us the market is moving up and it's going to continue to go up for X amount of time or movement. But more than that, it's nice that if it's not raining outside, that the weatherman tells us that it will rain outside. Same with an indicator. It's nice if it tells us that it will go up or it will go down before it does it, right? So that's the value in what you're looking at here. By the way, this is a proprietary indicator, so this is the only place you're able to access these particular indicators is with our organization. Okay, so right now we're waiting for it to get to that blue line, and hopefully it gets there before it gets to that red line. So let's go ahead and fast forward. So you can see it turned red because it went lower than where it started. Now it turned green again because it went higher than where it started. Come on. There we go. Okay. We would have taken profit on that one. Good. Let's fast forward that so we can get more candles to show up. All right. Erase that. Okay. So now green is on top, right? And now we want to wait until green crosses on bottom of red. So let's fast forward. Okay, green is now on bottom, and all 4 lines are pointed down, right? So right here, we would enter our short or sell trade at the end of that candle. So right there, 1.20592, and then we would take profit. We'd want it to go down to 1.20542, right? Right there. And we would not want it to go to 1.20642, right there. Okay, so let's click forward. Ooh, that got close. That went up 4.2 pips, and it may have gone down first, but if it did go up first, it almost hit our stop loss, but then came back and would have taken profit. It actually moved 3 times the amount that we're almost 3 times the amount that we're looking for to take profit. So good. All right. Let's see. So let's go through one more example here. I believe that was our 4th one. Okay. So now we want for green to be on top of red and all 4 lines pointed up. Let's go ahead and go forward. Okay, so green is on top of red, but these lines are not pointed up. So we would do nothing there, okay? Now there's a whole cluster of reasons why if we were just reading the indicators, we would sell here. We got some stuff happening on TNT, major, minor, and pressure that would give us a good indication that the market is going to short right here or sell. But we're looking for our square peg, square hole scenario. And if that's what we've back tested and that's what we're trading on, then that's all we're looking for. And if those parameters are not there, we do nothing, right? We are disciplined to our trade plan. And if our trade plan says that we're going to wait until we get all of our parameters before we execute, then that's exactly what we're going to do. We're going to wait until all of our parameters are present, and then we're going to execute. So right here, we're not going to do anything because it does not fit the parameters for which we're trading on, our systematic square peg, square hole. So let's continue. Same thing here. Green is on bottom of red, but not all four lines are pointed down, right? Minors are pointed up, majors are pointed down, so we do nothing here. Again, for a host of different reasons, actually, this would be probably a good opportunity to sell again. But again, it doesn't follow what we're doing. For if you're just getting started and you don't know how to use the indicators, you don't know how to read them more fluidly, then all you're looking for is this setup and that's it. We have a saying around here. It's learn one thing, let it get you rich, then figure everything else out, right? A quote that we always quote, actually butchered a couple times this week, but Bruce Lee, it's a quote from Bruce Lee, and he said, I don't fear the man that has practiced 10,000 kicks once. I fear the man that has practiced one kick 10,000 times. Right, so it's about mastery. If you master one thing, it'll get you rich. And then you have plenty of time to figure everything else out. Okay, so that's, and that works really effectively for our members. It's better not to spread yourself thin, right? I mean, if you're bored, get a hobby, right? Trade for 30 minutes a day, an hour a day, hour and a half, 2 hours a day, and then go and do what you want to do. Get your thrills out somewhere else. Go to Vegas or, pick up golfing or fishing or something else, right? But when you're day trading, you got to be about your money. You got to be about just like you would a job. You show up to the job to get paid and you do the job. Right? It's the same way. You show up to day trading and you day trade based on your trade plan. It would be like deviating from your trade plan is like trying to build a house without a blueprint. It's going to become a disaster. All right? So let's move forward. Okay, we're not going to take that one, right? So let's move forward. Now green is on bottom. We want to wait for it to cross on top, right? Right here it already crossed on bottom, so we're not looking at this because it was already crossed. Okay, so now we want green to cross on top of red. Okay, so green is on top of red now, and all four of these lines are pointed up. So right here, we would take another buy or long trade. So at the end of that candle, we would press the buy button. 1.20226 would be our entry, and our take profit would be 1.20276. Oh, right there. And our stop loss will be 1.20176. All right. So now we just want this to go up to that blue line before it comes down to that red line. Let's click forward. Boom. All right. 2.7 pips down, went 12.1 up, so that's more than double what we were looking for. Look, guys, you guys can act like you're not impressed, but that is phenomenal, right? Some of you guys might be asking, okay, well, there's such little movement, right? I mean, what kind of damage could you really do in such little movement? So we always do 5 examples, and we always kind of use parameters close to this. Sometimes it's a 10 pip stop loss and a 5 pip take profit. Other times it's a 1-to-1. So let's just look at a couple of examples here of what that could have meant for you. Okay, so let's go back here. All right, we already kind of went over pips, so I'm not going to go over that again. I'm going to go through this, so if you guys want to watch this later or pause it right now, you can kind of see that explanation of pips and points like in the futures market, but I'm not going to go over it. Okay, so what are the possibilities with what we just did? So let's look at a couple of things here. One, let's look at if we had a $2,000 account. There's another reason why we use the Forex market, because you can start an ECN Pro account with as little as $100, but or rather $2,000, but you can start a micro account with as little as $100. But the recommendation is $2,000, which makes it in terms of recommendation, the least of the markets. If you want to trade futures, the recommendation is $25,000 to trade futures, right? Because of the leverage and and the like. So here, if we just had $2,000 and we took those 5 trades, right? And we used a 0.2 lot size, right? Because we have a small account, we're not going to use a big lot size. So 0.2 lot size or volume equals $2 per pip, okay? So how many pips did we go for in those trades, right? Well, we went for 5 pips each, right? So 5 pips per trade times $2 per pip is $10. Each of those trades would have made you $10, okay? So 5 trades, right, because we did 5 pips per trade, 5 trades, times $10 equals $50. So those 5 trades would have made you $50. And we know we would have only checked them 5 minutes before the top of the hour, right? Because we would have gotten a notification for them. And then we would have taken the trade. 5 minutes for 5 trades is 25 minutes. Let's just call it 30 minutes. Heck, let's double it and call it an hour. It took us 1 hour to make $50, okay, on a $2,000 account. Now, you're not ready to go and retire in Hawaii on $50, but that is a 2.5% increase on your account. 2.5% in an hour on your account, right? In other words, if you had a $10,000 account, okay, and we're going to just step up the lot size relative. So if this is what a $2,000 account, the lot size we would use on a $2,000 account, then do the math. This would be what we would use on a $10,000 account, okay? So we're not trying to fluff the numbers here. A 1.0 lot size is $10 per pip. So what you were making in 5 pips, now you're making in 1 pip. And you took 5 pips take profit. Okay, so 5 pips times $10 a pip is $50. Okay, now 5 trades times $50 per trade is $250. Here's the magic. We did not have to take more pips, right? We did not have to take more trades. We didn't have to get bigger movement. We didn't have to have a higher win percentage. We didn't have to do all that stuff. Well, all we had to do is just continue to do what we've planned to do, and eventually our account grows. And when our account grows, as it grows, our lot size increases. And as our lot size increases, the same amount of work that we're doing here, but now it's worth this. You see the magic here? Again, time freedom, more money, okay? Maybe $250 is not a big deal to you in one day, in 1 hour of trading. Maybe it's not enough. Good, because that's just a start. When we fund accounts, we fund them at a max funding of $50,000 and $100,000, not $10,000. Our max funding is $50,000 and $100,000. That's what we max fund our students. And we've got hundreds of traders that are trading our money, being financially free in the markets because they don't have to work a 9 to 5. They just trade 30 minutes, an hour a day, and they're done. And they make 1%, 2%, 5% on their accounts, on their 6-figure accounts on a daily basis. That's why day trading makes more millionaires in a year than any other industry. By the way, over 90% of individuals that attempt to day trade fail. Our organization is completely different. We got way, way better numbers than that. Okay, so we're doing something different than 90+% of the rest of the industry. I'm not making up those numbers. Look those up. Over 90% of individuals that attempt to day trade fail. That's crazy. It's because you can't go onto YouTube and learn how to day trade. You can go and pay a couple bucks to some organizations, and you may not learn how to day trade, right? You've got to find the right stuff. You've got to find the right stuff. Fortunately for you, you found the right place. We've been doing this for over 10 years, which is much longer than a lot of people, right? Over 10 years. The indicators have been around for 2 decades. 2 decades. And it's only been since 2008 that we've allowed for others to trade on them. Okay, so let's look at some more possibilities. $10,000 account, we're going to look at it a little differently here, because this is how we actually do it. 5 trades, and we're going to risk 2%. So 2% of a $10,000 account is $200. Okay, our risk to reward is 5 and 5, right? 5 pip stop loss, 5 pip take profit. Okay, so if we're risking $200, then we would use a 4.0 lot size. Why? Because it's $40 per pip. $40 5 times equals $200, and $200 is 2% of $10,000. Okay, so we take 5 pips times $40 a pip equals $200 per trade. Okay, 5 trades, $200 per trade is $1,000. That's $1,000. 10% increase in your account. Which, by the way, we say, you know what, go for 2, 3, 5%. So this is like double what most of our students are doing when they first start out. Okay, so this is, but it's just using the math, right? We just use the examples. We like to take 5 trades as an example, and we did that. That would be a 10% increase had we done that. But really, we probably would have stopped after 2 or 3 trades and just made, you know, $500, $750. Okay, but that's a 10% increase. Check this out: $100,000 account, 5 trades, risk percent, same thing. 2% of 100,000 is 2,000, right? 1-to-1, same thing. 5 pips stop loss, 5 pip take profit. Our lots here are 40 lots, which is $400 per pip. Okay, 5 pips per trade times $400 is $2,000 per trade. 5 trades, $2,000 per trade is $10,000. It's still just a 10% increase. We're not doing more work. It's the same trade. It's the same amount of pips. And as our account grows from 2,000 to 4,000 and so on and so forth, then what each trade is worth becomes more, right? But we're still just taking the same measly little trade. And after a while, it's like you pop in, you play. It's like you're on autopilot. You pop in, place the trade, get in, get out, get on your way, right? You're done. It's lickety split, right? So think about what your goals are, right? What those goals that we talked about before, your why, the things that you've tried in the past. Okay, maybe this is too big of a number to imagine. Okay, and this is what our max funding is this, right? We do $50,000 to $100,000 max funding. Even at half of this, that's still $5K. Even if we didn't take all 5 trades and we only took 2 trades, right? You're still looking at $4,000. Okay, so $4,000, or here, $400. How much closer does that get you to your why? Excuse me. How much closer does that get you to retiring early, to building a significant, income by day trading that you don't have to go to your job anymore? Now you get to make money and have plenty of time to enjoy it. Not just enjoy the money, but enjoy the time freedom to hang out with your family, to hang out with your grandkids, to hang out with your spouse, or if it's just you, to travel or do whatever, right? It changes the dynamic of things, and you don't have to be in one place. Anywhere where you have internet, you can day trade. So it doesn't matter if you're on a beach on vacation somewhere in another country, right? You can still day trade, because as long as you got internet and you can connect to the indicators, you can connect to your brokerage, you can place a trade and you can make money. So what's 30 minutes, right? What's 30 minutes? What's an hour? What's 2 hours a day? We only recommend trading 2 hours a day to our traders, max. Okay, so most of them are trading anywhere from 30 minutes to 2 hours a day. Some days are even less than that. Right? Some days are just seconds. You put in your trades, they come out really quickly, and you're done. That's it. You go about whatever it is that you want to do in your day. You could be at the grocery store, right, and you get an alert. You go onto your phone, you check the indicators, wait 5 minutes, place the trade, and you set your stop loss and take profit. Before the trade is even out, you put your phone back in your pocket, and you go about shopping. Right? And it's going to win or it's going to lose. But if you've back tested, you know how often it's going to do one or the other, and you accounted for that with your risk percentage and everything else that entails money management. And now you're not worried about it because the losers are just the cost of doing business, and you know that the winners are going to outweigh the losers. And that's how you become wealthy at day trading. That's how you get your why by way of day trading. Okay? So let's look at some more examples here before we run out of time. All right, so we'll get to that here in a moment. I usually don't have time. I'm actually doing pretty good today. Okay. Let's go to, you know what? I'm going to show you. Last week I did this as well. I'm going to show you guys this 5-minute trade instead. Let's just go back somewhere today. And look at just today. I'm going to get rid of that. Let's get rid of these. Holy cow, I got a lot of charts open here. Okay. We're just going to look at a 5-minute chart. Now, each of these candles, of course, represents just 5 minutes of movement in the market. So what we're going to look for is something really simple. We're going to look for these lines, the major and minor, to be below this red line. Okay, and right now they're below that red line, and neither of them are crossed up. Okay, the green and red are like this, the gray is like that, and the black is like that, but none of them are crossed up. Then we want to see, after they're down here, we just want to see the moment that they cross and point up together, like that. See, right here they're below the red, but they're not crossed. Right here they're crossed. It doesn't matter if after they cross they're above the red or way up here, it doesn't matter. As long as they crossed together and pointed up together. So right there, we would go ahead and enter a buy trade. For these small scalp trades, let's just use a 5-pip stop loss and a 3-pip take profit. Which means we'd have to win this trade about 65 70% of the time in order for that risk to reward to be profitable, which is no big problem. Okay, so let's look for 5 examples of this one. So right here at the end of this 5 minutes would be our entry, right? 1.18867. So this is today. This happened at 17:55 UTC. So 17:55 UTC is going to be 1 p.m. Eastern, 11 a.m. Mountain. Okay, so you guys can go back and look at that if you want to. Okay, so 1.18867, and we're going to go up by 3 pips. So 86, so it's 89. So 1.18897. 897. And our stop loss is going to be 5 pips below that, so 1.18817. Make that line red. Okay, so we just want to get up to that blue line just like before we get down to that red line. So let's go forward. Not enough there. That's 5 minutes in, 10 minutes in. There we go, 15 minutes. So not bad. It took about 15 minutes for that trade. It went 4 total. Good, so we'll mark that. and erase those. Now, let's go back. Okay, so right here, they're above the blue line. Okay, so that's the next thing we would wait for, is for all 4 of these lines to be above the blue line, the majors and the minors be above the blue line. Now we just want to see them cross down together on the same candle. So in other words, if minors crossed right now and majors did not, then that would nullify it, even if on the next candle majors then cross down. Okay, so we need them to cross together. All right, so let's go forward. Nothing there. Looks like majors are kind of crossed there, so we'll leave that alone. Yeah, we won't do anything there. Let's keep going. Obviously, we're not going to do anything there because minors had already crossed right there, right? And majors, it looked like crossed right there. So we're not going to do anything there. Okay, now we're above the blue, so now we need them to cross down together. There we go. Okay, so right here would be our next entry, and that would be 1.18895, and we'd go down 3 pips, so we'd go to 1.18865. Right there. And our stop loss would be 1.18945. Right there. Okay, so we just wanted to go down to the blue line this time. 5 minutes, 10 minutes. All right, good. So that one's out. That one would have gone 3.6. That's enough to cover spread. So that's good. Okay. All right. Let's do 3 examples because I'm running out of time here. Okay. So now the indicators, let's go back. Nope. Right here. Okay, so right there, starting right there, now they're below the red line, right? Let's see. Yeah, they were not there. Okay, yep. So right here, they're below the red line. Now we want to see them cross up together, again, like we did on that first example. Yep, there we go. Okay, so right here would be our next entry, 1.18876. So our take profit would be 1.19. 1.18906. Oh, look at that, right on it. Okay. So 1.18906. So 87 plus 3 is 90. Yes, okay. And then our stop loss would be 5 pips. So 87 minus 5 is 82. So 1.18826. Right there. Okay, so we just want it to go up to that blue line now. 5 minutes, 10 minutes. All right, good. So that went up 3.9. That's enough to cover spread. Good, right there. All right, so let's see how long that took us, right? Just 3 trades. So the third one was right there. Let's go find these other ones. And what time is that? So that's 18:55. I think that was like, maybe that may have been exactly an hour. Okay, so let's go back. There's another one right there. And yeah, that's our first one, right? Let's see. Yeah, oversold right there. Boom, yeah. Okay, yeah, exactly an hour. Look at that, 17:55 when we entered our first trade, and 18:45 when we entered our third trade, and 18:55. Yeah, exactly 1 hour from when we entered our first trade to when we got out of our third trade. Exactly 1 hour on the mark. So that's awesome. Okay, so that would have been, some pop shots this morning that, you could have just jumped in, knocked down 3 trades. And of course, this would work out the exact same way, guys, that we were just looking at. Actually, a little bit different because the risk reward is different. But that 3 pips is less than the 5 pips that we were going for. right? But depending on what your risk percentage is, it can make the exact same amount of money, right? Because it's based on your account size, not how much movement the market gives you. Now, obviously, if you have a really low win percentage, then you're not able to put in significant lot sizes. You're not able to put in larger lot trades like we're talking about, a 1.0 or a 4.0 or a 40.0, right? Because if your win percentage is really low, then you've got a lot of back-to-back losers. And if you have a lot of back-to-back losers, then you can blow your account really fast if you're using too much on each trade. And that's not something we're going to cover tonight, but it is definitely something that people may not be aware of when they first start day trading, but it can absolutely cost them. So, think about that. If you took an hour this morning and you could have knocked down these 3 trades, right, just these 3 simple trades, if it was 3 trades, and let's just use the lots that we're just looking at, 1.0 lot size, right, so that's $10 per pip, then each of these trades would have been worth $30, right, because $10 a pip for 3 pips is $30. $30 times 3 is 90. So you would have made $90 on the day, almost $100 for 3 trades that took you an hour to sit around and trade. Obviously, we're not going to send out notifications on 5-minute setups because the alerts would never shut up. You would be getting hundreds of trades or alerts every day. It would just be more annoying than anything. That's why we use a 60-minute, because it would just be too noisy. You would stop paying attention to it. That's why we only use a 60-minute when we send out alerts. 3 trades, 1.0 lot size, $90. What was the other one we used? A 4.0 lot size. So this is $40 per pip. $40 per pip for 3 pips, that's $120. So that would be $120 per trade 3 times. So that would be $360, right? 1, 2, 3, 60. Yes, $360 that you would have made for that same 1 hour. Let's say that you were using a 40 lot. You have a $100,000 max funded account. You have an account that we put money in, $100,000 in, and you're keeping 80% of the profit. 80%. You're keeping the lion's share. It works great for us because we've got hundreds of traders trading, and we're keeping 20% by just putting our skin in the game, right? So we have just as much invested in your success as you do. Now, $400 per pip, 40 lot, 40.0 is $400 per pip times 3 pips, right? So that's $1,200 per trade, $1,200 per trade. $1,200 for 3 trades, right? That's going to be $3,600. $3,600 for 1 hour. Again, it doesn't matter if you're going for 3 pips or 1 pip or 30 pips or 1,000 pips. Matter of fact, if you try to go for, let's just say, 50 pips or more a day, you might be pressed to get that. You might have to put in a whole bunch of trades. If you try to get 1 50 pip trade a day, that you might not be able to. You might not be able to. It doesn't mean the market doesn't move 50 pips in a day. It moves way more than that. But you might not be able to find an entry for a 50 pip trade every single day, which means even if these were worth the same amount of dollars, a 3 pip trade and a 50 pip trade, the 3 pip trade would be worth more because you can find a whole bunch of those in one day. So you would be able to compound your earnings a lot faster with a smaller trade versus a larger trade, 50 pips or greater, right? So that's why a scalp approach, when you scalp the market, if you guys have ever heard that term, will always outperform a longer term approach. It will always outperform a longer term approach because you have more ability to compound your earnings, right? Because if I took a trade and I have $100,000, right, and I win for the day, so I have $3,600, Well, now I have $103,600 that I'm going to trade a percentage of, right? And every trade, and so if for that first trade, I would have $1,200. So this would mean I'd have $101,200. So if my first trade was worth this, then my second trade, if I was, let's say, risking 2%, my second trade would be worth, what is that? 120 bucks? Nope. 12. Let's see. Yeah, it'd be like we're $12 more, right? Because of this. So it may not seem like a big deal, right? 12 bucks, but by the end of the day, each trade is actually going to be worth $36 more, and that's just the first day, right? If we were using this math, it'd be worth, the next trade that you took the very next day would be worth $36 more than the last trade you took. So that's the power of being able to compound in the Forex market. That's the power of having a scalp method versus a long-term method. Now, a scalp method is difficult if you don't have the right tools. You can get in a lot of trouble really quickly. So you want to make sure that you have the right tools. So again, you're in the right place. We have the best. That's not just our opinion anymore. We've tested them. We have the best indicators in the industry. But it's not enough to have the best tool. You have to know how to use them. You have to know how to trade. It's not enough just to have an indicator or have a setup. You have to know how to trade. And again, trading is the blueprinting, backtesting, money management, all those things. So if you don't know how to do those things, do not live trade. You can go somewhere else, go to a different organization, go to a different whatever, but don't live trade until someone teaches you how to backtest. And then you use that information to build your trade plan and then execute. If you try it before that, you're just going to waste your money. And, you know, I've said that to people in the past, and they've gone on and they've tried it, and they lost their money, and they come back. Some of them come back and say, you were right. Others are too embarrassed to come back. But believe me, I've been around long enough to know there's a right way and there's an easy way, and really the easy way is not the profitable and it's not the right way. Now, the hard way is simple, but it's not easy. Okay? It's like digging a hole. If I went out into the desert and I marked a big X and I said, dig here, there's gold beneath this X. And you just started digging and you get 2 feet and 5 feet and 10 feet and 20 feet. Believe me, that's hard work, right? But it's simple. It's simple. You know how to do it. I mean, a toddler knows how to dig, right? Dogs and cats know how to dig. It's simple, but it's not easy. And generally, if it's easy, it's not correct. The correct way is simple, but it's not easy. So I hope that makes sense. Okay. So these are the possibilities, but of course, just like with anything else that you look at, you're not sure if it is everything that we say it is. Nor do we expect for you to just take our word for it. That would be foolish, right? We don't expect anyone just to believe us and take our word for it and say, hey, take my money, here you go, right? No, of course not. We want you to try this out. We want you to see if it works for you. Ultimately, it doesn't matter if it works for us, if it works for hundreds of other traders that are trading our corporate funds right now and being successful as professional day traders and changing their lifestyles, changing their financial trajectory, living a better lifestyle, having financial freedom and time freedom. It doesn't matter if it works for all those people. As far as you're concerned, if it doesn't work for you, then as far as you're concerned, it doesn't work, right? Now, you want to see, just like with anything else, if it works. And how do you do that? You usually try something out. Take the car for the test drive, right? And I'm sure you've tried out other things. And sometimes you had to pay for them before you tried them. Other times you didn't. And so let's talk about how you get to try out our program. And it's really simple, actually. For a while, we were doing it for free. That went away a couple weeks ago. So now, instead of paying $800 and some odd, which honestly I can't remember the last time we actually charged the regular price, because we want for people to try it out, it'll only be $10. We realized that you got to put something in Otherwise, you don't take it seriously. So $10 is your skin in the game to try it out. And as a measure of good faith, 100% of that will go to our charity partner this month, which is Feeding America. All of that, $10, will go to Feeding America. And check this out. For $10, they make 100 meals. It's pretty incredible, right? So it gives you the ability to change, to have an option to see if this is a good fit, to change your financial trajectory, to get whatever that why is, right? Whatever it might be. Spend more time with your family, or retire early, or replace your income, quit your job that you hate, supplement your income, whatever it might be, right? With this program, with the Trader LITE program, you're going to get access to our indicators. You're going to get access to on-demand training videos, right? They're going to be basic training videos because we don't want to, we want you to feel like you're drinking from a fire hose, right? We don't want to overwhelm you. But you'll have on-demand training videos. You'll have weekly continued education webinars. These are live. We do these real-time live. You can interact. You can ask questions, kind of like what we're doing here today. But those are to expound on other, nuances of the indicators, or money management, or psychology of day trading, a number of things, right? Anything that has to do with you being a more successful day trader. We have daily trading webinars. This is awesome. We take trades with our members live on webinars, and you can go in there and you can see what a professional day trader, one of our coaches, is doing on that webinar, which direction they're going to trade, and you can take that trade along with them. Trader chat for mobile and desktop. This allows for you to have contact with other traders, other coaches, and believe me, these guys are on there chatting all day and night. Sometimes we've got people that work service industry, or they work night shift at a factory or something, and when they get out of work, it's 2, 3 a.m. in the morning. So they're on there chatting with each other, or other people in the morning, afternoon, evening, all hours. It gives you the ability to kind of glean from what they're doing, ask questions. Heck, see what they think. Ask them what they think. That way you're not always just taking our word for it and hearing it from us. But see what they think, and then see if that correlates with your perception, right, as you go through the process. Because, again, it doesn't matter if they can do it. You need to see that you can do it. Of course, you're going to get the real-time alerts with this program as well, with the Trader LITE program, and 2 one-on-one coaching sessions. You're going to get 2 one-on-one coaching sessions with a professional day trader, where they'll go over setups like we looked at today and have you practice them with them, walk you through understanding them, have you do some homework on them, place those trades in the market in a demo account so that you can get really familiar on how it feels and what it looks like to see the setup, place the trade, and then see what kind of outcome you have, right? Because, again, what we want you to be able to see is, can you do this? Is it valuable? Does it meet a personal need, right? Now, we don't want you to trade with real money when you're on this Trader LITE program, because the things that we haven't shown you yet, because it would take a lot longer than 30 days, you don't know yet. And if you don't know those things, then even if you are successful in a demo account during this Trader LITE trial, that's going to be more just kind of luck than it is actual trading ability, primarily because there are other things that you still need to learn, right? So here's the link that you can go to. It's daytradesmart.com/free. Now, it's not free anymore, but we just reused the site, that page, and sign up. $10, you're going to get 30 days. You're going to get all this cool stuff. Now, I want to be clear. We are vetting you as well. We want to see if you're a good student. That's all we're looking for, people that show up to appointments and are teachable. Because we know if you're those things, then we can teach you these things, and you can implement them, and you'll be successful, and we'll be successful, and everybody will be happy. You'll have 80% of the profit, we'll have 20% of the profit, and then you're going to start trading your own money, right? Or you can start trading it immediately. It doesn't matter. We always recommend trading ours first. You can trade your own money and obviously you're going to keep 100% of the profit that you make with your own money. to get into those coaching programs, if we decide it's a good fit and we move you into the next level coaching, 6 to 9 weeks of coaching, and all of our programs come with one-on-one coaching and they come with the funded account, okay? Those start anywhere from $8,000 to $23,000 enrollment to our Trader University. Now, we don't do any high-pressure selling, so we tell you that up front because we want just the serious people. And if you're not serious and you're just more curious, then believe me saying $8,000 and $23,000 is enough for you to say, nope, not for me. And that's okay because it's not for you. We get that. It's not valuable for everyone, right? If it is something you can do, if it is valuable, if it is worth what we're asking for it, and it does meet a personal need, awesome. If you're teachable, you show up to appointments, good, we agree, you agree, we move forward. And your day trading career begins, you start making real money in the markets, and all those things that you've tried in the past, you finally found something that works, you start making moves in the right direction, and before you know it, you're where you want to be financially, you've got that time freedom, you're walking away from your job, all the things that you look for in opportunities like this. Believe me, if you're looking for day trading, you found it. You found the right place. Congratulations. Go to the site, daytradesmart.com/free. Sign up today. Get involved. Let's get you guys in on the program. As soon as you sign up, you'll have the ability to schedule your first session, and that'll be at your leisure, right, whatever times you're available based on our calendar, and someone will reach out to you for that session. You'll do a screen share, and they'll walk you through some trade setups, explain some things to you so you have a better grip and understanding of how the coaching process works, how our indicators work, how to place trades, and the like. I appreciate you guys joining us today. Thank you very much, and we look forward to working with you. Of course, if you guys have any questions after this session, feel free to email us, info@daytradesmart.com, and we'll look forward to working with you guys. You guys have a great day, and happy trading.